Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May 1st. I want to take just a brief minute to discuss what markets did last week. And wow, what a recovery week that we saw in markets, with the S&P 500 up 4.59% on the week. The mid-cap index was up 3.18%, and the small caps, as measured by the S&P 600, were up 3.2%. So large cap growth led the way higher last week, and it was off of corporate earnings. Google's earnings were very good, and that really sent the market on the growth names in the Magnificent Seven or the top 10, whatever you want to call it, sent those moving higher for the rest of the week. And you saw big moves out of there because they were also severely oversold on the downside. So those growth names that have been sold off the hardest, it's no surprise to see those come back the quickest and rally the most because they're the most beaten down names. And so what has allowed this market to recover? Where do we think it's going from here? And what are those catalysts? Well, 73% of S&P 500 companies are beating earnings. Now, this is down from the 5-year average of 77%, and it's down from the 10-year average of 75%. However, at 73% of companies beating, the earnings growth rate year over year for the second consecutive quarter is at 10%. So we have shown earnings growth in the S&P of 10% year over year as of Q1, from Q1 24 to Q1 25, with those who have reported so far. As we fast forward into this week, last night we got Meta and Microsoft earnings, which were very strong. And what's important about these big tech names that are reporting is it's not necessarily always just the revenue growth, the earnings growth, which are all incredibly important and play a part, but it's the guidance right now along how much of CapEx they're willing to spend, especially when it comes to AI. And we're not seeing a tremendous amount of pullback. We're seeing actually an increase in some of these large tech companies and the amount of spend that they're going to be investing in these AI areas and in CapEx, which is incredibly important for the market to see a future runway and a path for future growth and not stagnant growth. So all this leading up to, we had all of this fear run into the market. And if you were to look back 2 weeks ago, sentiment was at historic lows. We were heading for the doldrums. It was going to be a deep, dark recession. But at River Place, we believe again that we can skirt through this recession if we start to see some trade deals done. We believe it's going to be a messy process, but as long as we can show some forward progress here and momentum moving in the right direction, some companies are going to unfortunately be more affected than others, but just seeing through that landscape is going to get clearer and clearer as we get closer and closer to the 90-day relief of the tariffs. So we really do see the markets moving higher from here, and we have started the recovery process. We believe we said a couple weeks ago that the bottom was in. We still believe that's the case. We believe that deals will be catalysts, that we still see runway for future economic growth with deregulation and lower tax environment that should help spawn a future economic growth. So as always, if you have questions about how to navigate this time or what's going on in the markets or how to navigate this volatility, call us. We'd love the opportunity to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.